What's going on, guys? How are you? How are you doing? This is Shocks and this is ShocksCapital FX, a YouTube channel. Welcome back to the channel. If you are new to this channel, guys, subscribe, turn on your post notifications so that you don't miss any video from this channel. So guys, if you were here, we did talk about a strategy that we are going to unveil in this video, right? So before we start, guys, I just want to tell you about this amazing broker that you can be using to trade anything you think of. You can trade synthetic indices, currencies, gold, oil, anything you may think of. You even trade Nasdaq. You can even trade FTSE, the Dow Jones, everything. So guys, if you don't have an account with this broker, just click the links in the description down below and in the comments section so that you don't miss any move from us. So guys, today we want to talk about a strategy that you can use in trading with this broker and in trading anything you might think of. So we're going to talk about number one, we're going to talk about market structure. Then number two, we're going to talk about trend lines. Then number three, we're going to talk about channel corrections. We're going to talk about order blocks and confirmations on number four. And the last but not least, we're going to talk about targets and stops. So make sure you stick around until the end so that you understand how this step-by-step strategy works. So number one, we are going to talk about what we call market structure. So if we are talking about market structure, really in short, we are trying to explain how the market moves in terms of direction. So if you see a market moving like this, right? If you see a market moving like this, with the knowledge that I'm going to give to you, you might know what is really happening in the market. So this is how the market moves. So if you see something like this and you start applying the concepts that I'm going to teach you, for example, if you start applying the trend lines, if you start applying the channel corrections, you start drawing your levels like that, you understand what we are talking about. So a market structure, right? I'm going to talk to you about market structure in terms of how it moves and what is important and what is not important, right? So when you're talking about market structure, there are a few things that you have to get into your mind, a few things that you have to understand before you look any further, before you do any conclusions or something like that. So number one, you have to understand something about highs and lows, right? So this is a high, so this is a high, this is a high, this is a high. So the rule number one that you have to understand about market structure is when we are going up, when we are in an uptrend, the market will be breaking more highs than lows, right? Then if we are going down, the market will be breaking more lows than what? Than highs. So these lows will be taken out as we go down. So this is how a market is moving when we are talking about market structure. So when we talk about market structure, we have to understand actually three things. Number one, the high or the low. Then number two, you have to understand what you call a flippy. So this is a flip zone, right? Then number three, you have to understand a point of interest in this channel, or on this channel we talk about order blocks being our point of interest. So what we are doing is we want to know how these three things come together to form what we call a market structure and a bias. So number one, if you have a high locked in like that, this is a high, right? If a high is locked in like that, when price comes and breaks that high like this, it means we have taken out this high, meaning the decision to go up is stronger than the decision to go down. So price is more likely to come to retrace to around 50%, 61.8, 79% levels, then go down again, breaking this high. So it breaks another high like that, comes down. So it will be moving like this. So what you have to understand is this is the high, right? And if you draw out that line like that, this will be your flip zone. So there are two areas where price might turn from. Number one, it might turn from the flip zone, or it might turn from the point of interest. And as I told you, the point of interest is the order block. So I will link a video that talks about order blocks so you guys can understand what an order block is. So if you don't understand, I would advise you go to our channel, look through our videos and watch videos on order blocks so that you can fully grasp the concept. So number one, we are saying price might turn from the flip zone or it might turn from an order block. So what you have to understand about order blocks is an order block occurs between a high, this high, and this low. So an order block has to be inside that area so that price might retest and go and break that high. So an order block is between this point and that point, right? So the upper point being the what, being the high, which will tend to be a flip zone. So let's say we have an order block, okay, let's just use the new range, which is this one, this low and this high. So when price wants to retest, it might retest this flip zone and go up, right? Then retest or retest this order block and go up. So what you have to understand, or what you have to know, is these are two areas. You know where price is going to bounce from, and so it's not like you know absolutely where price is going to bounce from, but you are going to know in terms of probabilities what is most likely to hold, either the flip zone or the order block. So I'm going to be showing you, when you go to charts, when you can use a flip zone and when you can use an order block. So that's market structure. Then when you see market structure failing to break a high while it's been breaking them, so what I mean is we are in an uptrend here. When price fails to break this high, maybe it makes an equal high, or it prints something of a high that is lower than the first one, something like this. So we have two scenarios here. So the first scenario, so let's just put a different color on the second scenario. So if you're looking at the first scenario, this one, this is what we call a double top. This most of the times might call for what we term a reset. Most of the times this might not hold in terms of holding price to continue with the downtrend. It might do this, meaning this will be a reset of a trend, right? What we want most of the times is a scenario that looks like this, where price fails to make an equal high or a higher high, something like this, which we call shift in market structure. So if you see price doing this, we might be getting a reset, something that looks like this. So what you need is to understand what's going on in the market and how to use these structures. So with this, you can use this to sell from that end, but I'm just telling you it's not high probability. Why? Because it attracts, or it has liquidity on top of on top of those highs. So that's what we on to. Then when you go to trend lines, what are we saying about trend lines? Okay, trend lines don't work like what most of us traders want them to do. So let's say we are not using trend lines to trade. Let me give you this kind of a scenario. From this point, this is a high, this is a high, this is a high, this is a high. So what is price doing? If you look at this, price is breaking what? It's breaking the highs, as you can see. Price is breaking the highs. But what happened here is price failing to break a high, which means we have what we call a shift in market structure. When you have a shift in market structure and a breaking market structure to the opposite side, it means we might be having a change of trend. So this is what you use trend lines for. So if you draw a trend line like this, when it breaks here, it is a high probability that price, it signifies a high probability that price might be turning to the other direction. So what you can do is you can be waiting for price at this flip zone or at the order block like this. So that is what you will be waiting for, using trend lines. So that's what you use trend lines for. Trend lines will help you in identifying the major trend, in identifying the relentless trend, and when it's retesting like that, you don't buy here, you buy at an order block. So if you want to use a trend line like that, you have to put an order block so that you increase your confirmation and your confluences, and you buy from that area like that. So this is what you are doing, and this is what I would want you to do, and this is the only way I would want you to be using trend lines. So if we go to our chart for a minute right here, we can see that we might be having what we call a trendline break at this point. So what you see here is 1 touch, 2 touch, 3 touch. So this is a valid trend line. So a valid trend line should be having at least 3 touches. So this won't be a valid trend line if you draw something that looks like this. You understand? Have you seen other people drawing trend lines that is 1, 2 touches? So yes, you have, and those trend lines are not going to be helping you much. And please avoid drawing useless trend lines like these ones. You draw something like this, you are not doing anything really. You have to draw trend lines that you can use as a confluence, and those trend lines is something that looks like this, where you are saying we are in an uptrend and it's being respected, but it's taken out at this point, then retested here. So those are the kind of trend lines which you want to be using. I call them useless trend lines sometimes. So this is what we are having. So if you draw something that looks like this, let's say something that looks like this, right? Something that looks like this, it's not a valid trend line. Why? Because it has 1, 2 touches. But then if you refine it to be looking like this, then it becomes a very valid trend line like that. Then you can be using it when this one breaks. But would you see what I'm saying? You can be waiting for it to retest the flip zone like that, which it didn't, or retest the order block in that area. So you see what we are talking about. So that's how you will be using what trend lines, and that's how I would want you to use trend lines. Then you go to channel corrections. What do I mean by channel corrections? Okay, I mean it like this. Let's say our price does not move like this. I know I've been showing you this kind of a schematic in this video, but price doesn't move like this. If it moved like this, then trading will be very easy, and all of us will be millionaires and billionaires, right? So what am I saying? I'm saying price moves like this. Let's just so this is an impulse, then it does this. This is what I call a perfect market structure schematic that you guys have to know. So guys, you have to understand that these things doesn't happen every day, and you have to be very patient in waiting for these things. So let's just change color so that you know what we are talking about. So this is the real market structure. So the impulse is the one that shows the aggressive direction where price wants to go. Then the correction is the one that shows you where price is going. So most of you will be trading the correction as if it's the major move. You have to wait for the major moves. So when this happens, let's say price goes to an order block and respects the order block like that, then same thing here. So what are you saying? I'm talking about about something that I say it's called channel correction. So what do I mean by channel corrections? I mean something that looks like this when you draw trend lines. You see that trend line, right? Let's just make it touch that. All right, then this trend line again touch. So this is more like a channel. You call it a flag, I call it a channel. Yeah, one are the same. So this is another channel, right? This is another channel. So this is a channel correction. What do I mean? I mean the retracement that comes back, or that goes back to retest the what? To retest the point of interest has to be a channel. You can't expect, remember I told you market doesn't move like this. So why would you trade something that goes up like that and comes back like that when you know the market doesn't move like that? It's a trap. You need to see the market coming back to retest in this manner, in this manner, and this manner. So that's what we mean by what? By channel correction. All right. Then the order block. You know the order blocks. I won't rest much on order blocks. I'll talk about confirmations. So what you have to know on these charts. Okay, I'll give you a simple explanation. You have to see price 10 like that. You have to see a V formation on the order block, right? Or in the order block. We don't know. I don't know what preposition to use there, but you understand what I'm trying to get across to you. So we have to see a V or an A at the order block. That is what I call a confirmation. So what do I use for this sign? I use the star pattern, the evening star formation, and the morning star formation when I trade myself. That's what I use to confirm that it has really turned. And what you can use is let's say we have a bearish order block like that, then we have a green price moving into the order block like that. Let's say this is a green, then we have a, so this is the first step. The order block has been retested. What are you waiting for next? You're waiting for a confirmation. You have to see maybe some form of a railroad track that looks like that. Okay, let's just paint that red so that you guys know that it's a bearish candle. So this is a confirmation. Why? Because it confirms the downtrend in terms of this red candle printing at the order block. So you will be entering after it prints the order block. So the time frame doesn't really matter, but your entry time frame should show you that formation, or a star formation, a railroad, a star formation, or a 10. You understand what I'm saying, right? So that's what you want to see when you talk about order blocks and confirmations. If you don't see a confirmation, we don't execute, we don't trade, we will leave it like that. Then we go to targets and stops. So if we have a market like this, let's say you buy from this order block, of course you know that the stop loss goes below the order block like that, then the take profit will go to the top of the range. So this is your range, this is your low, and this will be what? Your high. So if you enter close to the low, your take profit is going to the high, something like this, right? So this is what you are doing. So that's the high that you are looking for to take entry. So guys, I hope you got that. So let's go to charts and really try to understand. So these are Deriv charts, right? I told you that these are Deriv charts, a very good broker. If you don't have an account with Deriv, please don't be left behind. Just go register with the links in the description down below. You can trade currencies, you can trade synthetic indices, you can trade gold, you can trade indices, Nasdaq, anything you might think of, you will find it on Deriv, and you can fund using Bitcoin. And you can withdraw using Bitcoin again. You don't need verification for you to start trading. You can register your account and verify when your withdrawals reach 10,000. So we want to analyze or mark this chart up. So what you're going to do is you're going to mark stuff that you see first. So what I see by just looking at this, I see this trend line, right? You understand, I said we look at trend lines, market structure, channel corrections, order blocks, and confirmation, then think about what targets and stops. So this is what I see first. That is the trend line. So what do you see second? This is an impulse, right? This move right here, this is your impulse that you see on this chart, and you might also see that this is another impulse that is on that same chart. Then this is another impulse. So after you see that, you then mark up your points of interest, which is the flip zones and the order blocks. So this is the OB. So we are not doing much to the order blocks. Let's just mark them. So you don't have to mark a lot of order blocks on your charts. Why? Because you're saying an impulse has one valid order block, and by looking at this chart, you might be having a lot of order blocks, but we just want 3. Why? Because we have 3 impulses. So one impulse is giving us 1 point of interest. So we have our trend lines drawn, then we have our market structure marked up, then we have to mark our flip zones. So this is a flip zone. Why? Because we are having a low being taken out there, then we have another flip zone at this area, then another one at this area, and this one at this area. So what you are just doing is you are waiting for price to react from any one of these zones. So remember, I told you order blocks and flip zones don't work the same way and might not work at the same time. So you have to choose what you are going to use before price moves. So if you have chosen to use order blocks, you are going to be sticking to that, and if you have decided to use flip zones, you are going to stick to that. And the other way you might be selecting or making that decision is by looking at the order blocks first. So what do you look, or what do you consider on the order blocks? You are going to consider only valid order blocks. So what is a valid order block? It's in simple terms an original and fresh order block. So if an order block is not original and fresh, it means you are going to be looking for what? You're going to be looking for a reaction from the flip zone. So let's look at this order block. If you zoom in here, what do you see? Let's look at this one. You see that this is not an original order block. Why? Because it was formed by retesting another order block. So by knowing that, it means you are going to consider a flip zone instead of an order block, because we want order blocks that increase our odds of winning a particular trade. So if this is to be considered a successful retest of a point of interest, it has to be here at the flip zone rather than at the order block, because you see nothing really happened there. We could have caught 1 in 3 here by considering the flip zone. So you have to choose. If an order block is not original and fresh, you have to go for the flip zone. And the flip zone, remember, one impulse has one flip zone as one order block. You don't have to mark out all these as your flip zones. What you're just going to do is you're just going to clutter your chart and confuse yourself. You just have to use one flip zone, and if this is the impulse, there's only one flip zone, that is the break of a major high or a major low. So in this case, we took out this major low. So this is your flip zone, and this is what you are going to be using as your point of interest. So you can be looking at mitigation blocks and breakers around these flip zones for you to increase your chances of winning any particular trade that you might be considering. So this is a very good flip zone, and as you can see, this held successfully, and if you had been involved in that trade, you could have made something. So let's go to some currencies chart and try to see what we have been talking about. So from just looking at this, you can see that we have this trend line which we did draw earlier. Then we can be looking at market structure. So if you are looking at market structure, first of all, you have to consider the impulses. So where is the impulse? We have one impulse here, then we have this is just consolidation. This is not an impulse, so we can consider this as an impulse. So an impulse is a move that breaks a major high or a major low. So that's what we are considering in choosing these impulses. So that's another impulse, and this is another impulse. If a chart confuses you, you have no business trading or marking up that chart. You just have to move on to the charts that you understand. You will not understand all the charts. You just have to be picky and choose when it comes to these things. So this is the flip zone. As you can see, it did not hold. Why? Because price went on and retested a order block. So you have to understand, or you have to have an idea where price might be reacting from. So this is a flip zone, as you can see, but we have a fresh and original order block just above it, and we are going to be using that as our point of interest. Remember, our first priority when it comes to points of interest is the order block. The flip zone comes second if the order block is not a valid one in terms of our conditions that we look at when we choose our order block. So that's market structure and trend lines. Then number 2, you have to consider the corrections. How is price retracing back to your order blocks? That is what you have to know, and you have to decide. So from this chart, we can see that we are having those channel corrections. So if it's not clear on the time frame that you will be able to just move 1 or 2 time frames lower, then you might be getting your things. The last thing you have to do is entries. So on entries, you have to look forward for confirmations around your order block. So you can be trading literally from any time frame. You can be taking your trades from the H1, from the M30, from the M15, any of those ones. So what you just have to do is you just have to find the confirmation on the on the order block. So if you draw your flip zone like this, it means when price retests that flip zone, prints the black candle, that is the bearish, then it prints the bullish candle like this, right? So this bullish candle is what you are going to be considering as a confirmation of a trend, or a confirmation of a trade. When this prints, when it closes, you get your trade in, or you get your trade when price just retraces to 50% of that candle if it's too big like this. So this is what you're just going to do. So if you do that, or if you do everything I said and wait for confirmations, you're going to find it very easy. So if you don't have an account, if you don't have a reliable broker, if you are not happy with your broker, the links are in the description and the comment section. Just register with Deriv broker. Very good broker, very tight spreads, and very flexible payment and withdrawal methods. So guys, I hope to see you in the next video. I am Shocks. Trade what you see. I'm out. I hope this was helpful. See you in the next one.